Hey everyone, and welcome back to the FishMarketAcademy, where we teach how to fish for gains. So in today's video, we'll be doing a follow-up video for the Prism Protocol and trying to explain what is the valuation of Prism as well as pLUNA and yLUNA. So if that sounds interesting, remember to like and subscribe, and let's get started. As usual, nothing I say is financial advice. Okay, let's do a quick recap first for those who didn't watch the previous video. So Prism Protocol is basically a derivative protocol on Terra that offers leverage exposures with no risk of liquidation as well as liquid staking on steroid. So basically, Prism allows users to swap their Luna into cLUNA, which then refracts into pLUNA, which is principal Luna, and yLUNA, which is yield Luna. So pLUNA allows the users to speculate on the price action of the token, whereas yLUNA allows the users to speculate on the future staking rewards. So how do you estimate the value of pLUNA versus yLUNA? One simple way is to use a discounted cash flow model. So if we take Luna at $50, which is around the price it is right now, and a staking reward of 10% for Luna, right, and assuming Anchor's 20% is essentially the risk-free rate of the Terra Luna ecosystem, then you basically get $50 times 10% equals to the $5 for the returns of staking Luna. And if you use the discounted cash flow model, which basically allows you to estimate the present value of yLUNA based on future cash flow, you will basically take $5 divided by 20%, and that gives you about $25. So if cLUNA, or basically Luna, is made up of pLUNA and yLUNA, and if yLUNA is $25, then of course pLUNA is $50 minus 25 equals to $25. So right off the gate, it seems to be 1:1, but we shall see if the market decides that it's going to be 1:1. There are different reasons why at different periods and different environments where yLUNA will be more favored, and different environments where pLUNA will be more favored, which we'll explore in a bit. So in my personal opinion, I think because the market is very uncertain right now, it's going to be 1:1 for a while. But when there is more clarity in the market direction, if it's more bullish, then I think pLUNA will be higher in value. But if it's more bearish, then I think yLUNA will be higher in value because there is less risk on the principal exposure. But of course, that's just my opinion, and I wouldn't be surprised if it remains as 1:1 for a while. So let's explore the intrinsic value of pLUNA and various scenarios where the value of pLUNA will go up, and that's where you want to be more bullish on pLUNA. Essentially, when the demand of UST increases, right, which means UST goes above $1, then people might want to arbitrage this risk-free profit, and they do this by basically buying Luna and then selling the Luna, or basically burning the Luna into UST and then selling the UST for risk-free profits. So during periods where there's increased demand of UST, you can expect pLUNA to increase more. So then the next question, of course, is why would UST go above $1? And that happens when there is more demand for UST to use the new dApps built on the Terra ecosystem. For instance, back when Mirror Protocol launched, I think Luna went all the way to $22 when it was like from like $1 or something, or even less than that, with the launch of this protocol that allows people to basically trade synthetic assets. And with the launch of Anchor, which followed soon after Mirror, it further gave people reasons to actually buy UST to deposit in the Anchor and earn 20% risk-free. So that was the catalyst for a huge demand for UST. And that caused the price of Luna to go up as the people basically had to keep buying up Luna to burn into UST to arbitrage the UST price being above $1 during the period of increased demand for UST. Additionally, with the tightening of regulations on centralized stablecoins, people might be choosing to decentralize or diversify their stablecoin portfolio a bit more by choosing to go for UST instead of USDC. So if you move from USDC into UST on some of the pools, even on centralized exchanges, that does increase the price of UST to be above $1. And if that happens, then there is again risk-free arbitrage opportunity for people to buy Luna, burn it into UST, and then basically just earn the risk-free profit. So that is some of the scenarios where people would be buying up UST, and this will increase the demand for pLUNA. Last but not least, there are certain Luna ecosystem grants that would incentivize people to buy UST to provide liquidity in the form of UST and another volatile asset. And then the grant will give them Luna to basically provide this liquidity in the form of UST, and hopefully after the incentive program is over, they don't sell away their UST, so they just keep it as UST. So this way, they are basically adding more UST demand from outside the ecosystem by providing LUNA grants. And hopefully they take that LUNA and then they bring it back into the LUNA ecosystem and then they stake it. So this way, there is only additional demand for UST and no exit, and that would be the best case scenario. Okay, how about the intrinsic value of yLUNA? So yLUNA basically is the yield that is generated for staking LUNA, and this yield increases when there is more mass adoption or mass activity within the Terra ecosystem. And the yield that you get for staking LUNA, or in this case yLUNA, comes from the Oracle pool, which comes from the gas and swap fees and the spread fees. So just to explain further, the gas fees is basically the computational fees added on each transaction to avoid spamming. If you're using ETH or other layer 1s, then you should be familiar with the term gas fee. And there is also additional swap fees and spread fees. So swap fee is basically the swapping fee from Terra denominated stable coins like UST, KRT, and when you use that to swap into LUNA, there is a swap fee, and there's also a spread fee for swapping Terra stablecoins and LUNA. So all of these fees get added into the Oracle pool, which is then distributed to LUNA stakers. So just think of it as owning Visa, the company, where the more people use the Visa network, then Visa shareholders gain the benefits. So in this case, LUNA is sort of like a payment network, and if more people use LUNA, then the LUNA stakers get rewarded through all of these activities. So all of these fees get sent to the Oracle pool, and the gas fees specifically are dispersed to validators after every block, while the swap fee and the spread fees are distributed over a 2-year period to validators who report the correct Oracle prices. So if you look at the intrinsic value from all of these staking activities, right, since it's reported over a 2-year period, you can sort of already predict how much is being given out to LUNA stakers. And Mr. Refractor, as well as this Twitter handle called IIIOIOIII, also did up this projection, whereby if the price of LUNA stays at about $50, then your minimum LUNA yield is about 10%. And that's pretty good. So this is how you have intrinsic value for the LUNA token as well as the yLUNA token, which is the yield specific component of LUNA. So let's take a look at Prism use cases. And the first one is you can leverage without the risk of liquidation. You can also receive capital upfront for future yield. And you can also do lossless investing as well as liquidity provision. So let's take a look at each of these use cases one by one. So let's take a look at Prism's first use case where you can leverage without the risk of liquidation. So how this is done is basically you take your LUNA and you refract into pLUNA and yLUNA. And because pLUNA and yLUNA equals to 1 LUNA, you can take your 1 yLUNA and sell it into 1 pLUNA and basically end up with 2 pLUNA for basically just giving out 1 LUNA. So in a way, it's sort of like 2 times leverage. And when you're ready to take profit on your pLUNA, you can sell it back into yLUNA 50-50 on both sides and then convert it into LUNA. And by rights, you will have more than 1 LUNA due to taking on leverage exposure to the LUNA price due to pLUNA's nature. In Prism V2, where you have futures, during maturity, right, the pLUNA can be swapped for 1-to-1 LUNA. And then you basically get 2 times the exposure for LUNA at a fraction of the cost, or basically 50% of the cost. But realistically, when futures does open, due to yLUNA expiring into $0 upon maturity for yLUNA futures specifically, I don't think 1 pLUNA will be 1-to-1 with 1 yLUNA for the futures. Might be wrong, it's just kind of feels too good to be true. If that's the case, I'm basically essentially always getting 2 times leverage on pLUNA without much risk. Okay, and the second use case is to receive capital upfront for future yield. So Prism enables users to trade in their yLUNA at the current market price, providing them with upfront capital, which is very similar to the first use case. But what you can do afterwards is to borrow against the yield of this asset instead of the principal asset itself, and that would remove any risk of liquidation as the yield asset will be very stable in price. The third use case is lossless investing. So while Prism Protocol allows users to lock up UST for upcoming project tokens on Terra, this is capital inefficient because you basically lose the liquidity and you can't do anything with the UST afterwards. Prism will be launching fixed contracts soon where users will deposit UST into Prism, which will then be deposited into Anchor and then refracted into principal AUST and yield AUST. So the yield AUST component can be locked up in Pylon to farm new tokens, while users get to keep their principal AUST, which can then be swapped for UST 1-to-1 upon maturity. And the fourth use case is liquidity provision. So the ability to refract LUNA into pLUNA and yLUNA will create more opportunities for liquidity provision, and you can basically use your pLUNA and yLUNA to provide LP, which will reduce impermanent loss via pools such as pLUNA and yLUNA. And what they have in mind is to have all the pools paired with the Prism token on Prism Swap, which would create deep liquidity pools so that it's capital efficient and only 2 steps away from any swaps onto any different token. So just to recap the launch phases, right now we are in phase 1, the Prism Forge or the price discovery phase, which will be another 36 hours depending on when you see this video. And then after that will be the Prism Swap, where you swap your UST into the Prism. And then after that you can refract your LUNA in phase 3. And then in phase 4 you can farm Prism by depositing yLUNA. So in phase 1, it will last from 1st February to 5th February. Again, there's about 36 hours left depending on when you watch this video. And you can deposit any amount of UST into this pool right now. Before the 5th of February, you can withdraw as much as you want. But on the 5th of February, you can only withdraw one time. And the withdrawal amount decreases by 4.2% hourly. So it's going to be 100% on the first hour. And as it goes along, like 12 hours later, you can only withdraw about half of it. So the price of Prism tokens is determined by the total UST deposited into the Prism Forge, and there are a total of 70 million Prism inside the Forge. So for example, if there is 70 million UST deposited into the Forge, then 1 UST per Prism, or Prism basically is worth 1 UST. What is cool about this fundraising is that anyone who participates in this are doing so actively and willingly, and everyone will get the same price, and bots are unable to front run this by basically getting a significant amount of the supply initially when the price is cheap, because everyone will be getting it at the same price. So right now we are on day 3. There is still a little bit more time in day 3 and 24 hours in day 4. And then lastly on the 5th day, you cannot deposit anymore and you can withdraw only one time. So just to recap. In the second phase, there will be a DEX listing where you can basically buy and sell Prism on a DEX. So the 70 million Prism tokens, which is 7% of the entire supply, will be released to participants all at one go. And there is no vesting or no lockup. Basically, you can take the entire Prism and then you can choose to sell it, or you can choose to provide UST LP into the pool. There will be no incentive to dump the initial Prism tokens that is from phase 1 because everyone's buying at the same time. And there's no large unlocks or vesting period or airdrops or pre-sale. But just keep in mind that the rewards that is generated from Prism UST will probably be dumped by some farmers, but I think that's unlikely to happen immediately from the start. In phase 3, Prism will open its mainnet so that people can refract their LUNA into yLUNA and pLUNA. Users can stake yLUNA or provide liquidity to receive staking rewards, which are additional yLUNA, pLUNA, and airdrops, as well as getting additional liquidity incentives. Users can also stake Prism to receive xPRISM, which is basically staked Prism, or they can use Prism Swap to leave limit orders or trade between 7 incentivized token pools, which we will go through in a bit. So these are the 7 incentivized token pools. They're all going to be paired with Prism, and basically pLUNA, yLUNA, UST, xPRISM, cLUNA, LUNA, and AUST will all be the incentivized liquidity pool, and expect deep liquidity for all of them. So in phase 3, they launched the web app, and this is how the preview looks like as well. I have not actually tried it, but this is a screenshot, and it looks pretty robust. And in phase 4, you can start to farm Prism tokens using yLUNA. So after you refract your LUNA into yLUNA and pLUNA, or you just decide to swap into yLUNA, you can then stake your yLUNA, and basically the yield from the yLUNA is converted into Prism tokens. But these Prism tokens, you cannot just farm and dump it. They will be claimable after 30 days later, so there's like a 30 days vesting, and about 13% of the entire Prism will be basically for this Prism farming over a 1-year period linearly. But you can remove your yLUNA at any time without any penalties. So just to take note of the important dates again, we have 5th of February is the withdrawal date, and anytime from now to 4th February you can still deposit, and then 6th February you can start to swap Prism, and then 11th February you can refract your Prism, and 16th February you can farm Prism with yLUNA. Alright, now let's explore the utility for the Prism Protocol token. So obviously, Prism is a governance token, and you can stake it to receive xPRISM to participate in governance, but it can also be used to borrow, lend out, or provide liquidity on Prism Swap. And in terms of fees generated, or basically revenue, xPRISM holders will receive fees that the protocol generates, and basically the fees will be converted into Prism and then added into the xPRISM pool and given out as Prism rewards. The fees include 10% yield of Y assets that is being staked and 100% yield of the unbonded asset. So basically yLUNA doing nothing in your wallet, or even if they're LP, this goes into the xPRISM pool to give to Prism holders. So all of the yLUNA yield that's generating gets swapped into Prism and then is given out to xPRISM stakers. And 0.1% or 5 UST maximum of all swaps is also given into the pool, as well as 0.3% of all limit orders on the Prism swap protocol. So they have 4 revenue streams, which generally I think are pretty good. These are all pretty relevant revenue streams, and it will be quite interesting to analyze the revenue generated from Prism. It does seem like it's going to be a pretty strong cash generating protocol, and I'm excited to do like discounted cash flow models on Prism valuation as well. Additionally, Prism also offers slashing insurance when a validator suffers downtime. So basically, if you are a validator and you pledge xPRISM as collateral, you will be using your xPRISM as insurance to cover any slashed amount instead of Luna. So this could be a very incentivizing reason why validators will be getting Prism, so that they can protect their Luna in case of any downtime. Prism also has a VE model, or a vote locking mechanism model, where you can lock your Prism for a longer period of time, of 1 week and all the way up to 4 years, and the more you lock, the more voting power you have, and the bigger the yield payout you will get. So Lejimi from Prism as well as GT Capital has provided a pretty nice Prism Protocol valuation calculator. I'll put a link down in the description below, and you can go in there to play around and basically estimate what the price of Prism should be based on certain variables. So there's a total supply of 1 billion Prism, and the TGE is on the 6th of February, which is going to be a Saturday. So in terms of tokenomics, there have been some concern because 30% of it are core contributors, as well as 10% of it is strategic partners, and these are regarded by the people in crypto as generally like the Prism team in a way, and that's usually quite high because usually if you watch previous videos, we tend to prefer 20 to 25% as the upper limit for team tokens. But do keep in mind that these contributors and partners are basically Terraform Labs, Jump Crypto, Hashed, and Refracted Labs, which are all very well regarded as investors. So I don't think this large amount of Prism being given to the Prism team is going to result in very poor tokenomics compared to other protocols where they're giving 40% to the team. Because I believe these investors have a long-term vision for the Prism protocol, and it's in their best interest to ensure that the price and the reputation of the Prism protocol remains strong. Hash has also agreed to contribute 9 figures, or over 100 million worth of UST and Luna, to provide the initial seed liquidity for the Prism pools. So in terms of the initial distribution, there are no airdrops for the Prism tokens, and in terms of the vesting cliff, there is a 6 months cliff for the core contributors and partners, and after that there is a 18-month linear vesting. So after July 22, you will start to see more supply being added in to the circulating supply due to the vesting unlock. Additionally, there will be a large amount of initial liquidity provided. So with this deep liquidity, the protocol doesn't have to attract liquidity providers by providing large inflationary liquidity incentive, which is not good because that will dilute holders. So we won't have to worry about dilution from liquidity incentive for Prism protocol. So this is the emission schedule. Feel free to pause this video and then just note this down on your calendar for the important dates. So in conclusion, Prism Protocol will be a black hole that will bring in value from other chains into Terra. So what this means is that right now we're just talking about Luna being refracted, but any other yield generating assets, which are basically any proof of stake assets from Solana to the Atom ecosystem to even your Avalanche or Phantom, for example, they could theoretically be refracted into the principal component and the yield component. So other ecosystems, if they don't have this kind of protocol, then users might want to bridge these assets into Terra in order to use the Prism protocol to refract all of this. And then the Prism protocol will be generating a lot of fees from all of this volume, as well as all of the yield tokens that is being staked with Prism. And in terms of whether you should go with pLUNA or yLUNA, basically if you think the demand for UST and the price of Luna going up, then you should go with pLUNA. Or if you think that the overall Terra ecosystem will be doing very well in terms of the number of activity, perhaps there could be a new GameFi launching on Terra, which will generate a lot of volume without attracting any additional new UST into the ecosystem, then you might want to go with yLUNA. And of course, right now, the Prism Forge is live, so remember to lock your UST in phase 1 before it ends in just 1.5 days. And all of your Prism tokens will be unlocked on 6th February and there will be no vesting. At the end of the day, remember to do your own research and invest with caution. So that's all for this video, and I'll see you guys again soon. Bye!
Baby fish do 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 do, baby fish do 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 do, baby fish do 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 do.